thinking about buying in Lancaster next year, but you've got zero saved right now, this is your 12-month plan. What do you need to do, who to call, how much to save, and the real cost of home ownership. Hi, my name is Albert. In the next few minutes, I'm going to show you the exact steps of how to get mortgage ready, how to stack extra income, and how to get rid of credit and debt fixes. How much cash you'll need to actually purchase a home in Lancaster in the $175,000 to $225,000 range, and how to get it set up with your 1-year game plan. Now, these are the ground rules. So a little bit of tough love for you. If you are carrying consumer debt, step 1 is to kill the debt. No, pause all non-essentials, no new car loans, no buy now, pay later loans. We build the cash first. Now, quick disclaimer, I'm a realtor, not your friend or your financial advisor. Programs can change, and this is educational, not lending advice. Get customized numbers from a licensed lender. FHA and conventional rules and limits all are done by the government / by the independent banks themselves. Now, with all that said, let's get rocking and rolling with the 12-month plan. Month number 1 is the audit and budget. So we're going to see exactly where we're starting. So pull up a free credit report at annualcreditreport.com. You want to go in there, dispute any errors, and get some consumer advice. You'll also want to open a high-yield savings account and set auto transfer for the day you get paid. Now, your target is going to be able to save $834 a month. This is going to be $10,000 in 12 months, or approximately $27 a day. Now, month 1 to 3, want to stack our income, so asking for the busiest shifts, overtime. If you're in hospitality, think about those weekend shifts. If you can work in the night shift to get additional pay, do that. Number 2 is to pick up a side job or a side hustle, anything that's going to allow you to get any extra income. If you live alone, think about renting a room or moving in with friends or family. If you can get a roommate who's going to cover an additional $500 to $800 of your rent each month, that money can go directly towards your house fund. Now, months 1 to 12. So this can take a little bit longer, but you are never going to want to miss a payment. So make sure you auto pay all of your monthly payments, preferably the full balance on your credit cards if you can. Keep your utilization low, below 30%, but ideally below 10%. And do not open any new credit cards or any lines of credit. Number 2 is talk to a lender as soon as possible. Ask for a lender to underwrite and give you a written plan of what your credit score target should be, the documents you're going to need, and a debt pay down order if you have any debts to clear off. Discuss the different loan types and what's going to be best for you, whether that be FHA, conventional, USDA. Again, if you're running with lower down payment money, there are various programs that you can qualify for depending on your income and the area. Now, month 3 to 6 is just to execute the plan. So basically go to work, finish and pay off any debt, get rid of any of those credit disputes, and ultimately keep saving that $834 a month. If you get any tax refunds, don't spend them on stuff. Again, use that money to help get your lump sum as big as possible. Month 6 to 9, start getting your pay stubs, your W-2s, your 1099s, any ID and rental history, and any letters for any large deposits that you've put into your bank account over the past year or so. You want to recheck your pre-approval amount, and then get ready to start looking for that first home. Now, target modest homes. One of the big mistakes is people tend to try and get a really big home in their first one. If we're trying to keep costs down and we have limited money to purchase, then targeting a home in the $175,000 to $225,000 range is going to make your closing costs more affordable, but also the ongoing cost of a mortgage as well. Now, when we're writing offers, you want to ask for seller help strategically. If you want seller help, make sure you're looking for homes a bit on the market a bit longer so they may be willing to negotiate. Now, what cash do you actually need in Lancaster? Now, here are some realistic cash to close estimates for starter homes. Now, assuming buyer closing costs and prepaids are around 4%, this includes 1% for the buyer side of transfer tax, your title fees, lender fees, escrows, etc. And then if you're FHA, there will be an additional 1.75%, but this is usually rolled into the loans. Your actual numbers may vary, so please do check with the lender first. If we're doing FHA, we're doing 3.5% down, and sellers can help cover up to 6% of those closing costs, not the down payment. For conventional, we can do 3% down, and the seller help can cap at 3%, unless you're doing more than 10%, in which case you can ask for more. But since we're trying to keep our cash to close as low as possible, we're probably in that 3% option. Transfer tax is the 2%, and it's commonly split 1% buyer, 1% seller. However, I recently had a person, we were able to negotiate the seller paying both sides of the transfer tax. So typically, your buyer closing costs are going to be around 2 to 5%, depending on how much seller help you're able to get. Now, cash to close estimates. So let's take that $175,000 home. It's an FHA offer. We've got a 5% seller help. Your cash to close is going to be around about $6,100. If we're only able to get 3% seller help, your cash to close is going to be nearer $8,000. If we're conventional with 3% seller help, it might be again around $7,000. Very similar to FHA, but obviously you have a slightly lesser down payment. On a $200,000 home, FHA 5% and seller help is going to be about $7,000. If it's only 3% seller help, $9,000, because again, it's slightly more expensive. And then conventional with 3% seller help is going to be around $8,000. Again, these are ballpark figures. The benefits of that seller help is it really minimizes the out-of-pocket money you need. Also, depending on when you're closing in the year or in the month, that can also impact your overall cash to close as well. Now, if you qualify, you may also be able to get something called a PHFA K-Fit, and they can provide 5% towards your down payment and closing costs. And this is a forgivable grant that can be forgiven over the 10-year period. So if they give you, let's say, $10,000 each year, that number that you'd have to pay back if you sold the home is reduced by $1,000. But how am I going to get this $10,000? I hear you ask. I know $800 can be quite a big number to save, especially if you already feel like you're working all the time. However, if you have that spare room, you could always rent it out for $600 to $800. That's going to generate you $7,200 to $9,000 in your pocket each year. If you're able to pick up overtime or busy shifts and work an extra 5 hours a week at $22 an hour, so let's say that was your time and a half or including tip money, that's $7,100 a year. Potentially pick up a second job or even ask your current job if you could pick up more hours there. Because again, if you're earning somewhere between $17 to $18 an hour and you can pick up an extra 6 to 10 hours a week, then that could be the difference you need to get your down payment. You could always sell unused stuff as well. If you have a second car, look to clear that away, and then you're going to save money on insurance and gas and wear and tear on that as well. You could sell things like PlayStation or Xbox or any unused games you may have or any collectibles that were once valuable to you that you no longer use. Now let's talk about your monthly payment. So it's all fair and well buying the home and having enough cash to close, but what is included in that monthly payment once we purchase the property? So your monthly payment is broken down into something called PITI, which is principal, interest, taxes, and insurance. And if you have less than 20% down, you're going to be paying mortgage insurance on that as well. Utilities, plan for around $350 to $450 a month for your essentials. That's your gas, electric, water, sewer, and Wi-Fi. For maintenance, you want to save around 1 to 3% of the home. For older homes, it tends to be towards the higher end of that budget. So if you're buying a $200,000 home, budget $2,000 to $6,000 a year for those repair costs, which is why it's another reason if you can learn to save that additional money now, you can use it to help cover your repairs at a later date. If there's an HOA or a condo, those dues will also be due. Now, buyer agency and buyer agent commission is a thing that's changed. So a buyer agent pay is changing, and you'll have to sign something called a buyer's agreement with an agent like myself, and we'll address that compensation up front. So often we negotiate with the seller who gives you a credit towards your closing costs and helps cover the buyer agent commission. This isn't always the case. However, it is also possible to negotiate with them to get you some more, and you can always increase the price of the property in order to get some towards your closing costs. Now, who exactly should you be talking to? So first of all, you've got your local lender. They're going to help you build your custom plan and find out which type of loan is going to be better for you. They're also going to be the one guiding you through the entire underwriting process to get you that loan in the first place. If your credit isn't where you'd like it to be, speak with a credit counselor. If you need a little bit more help with your score, they're just going to set you on a plan in order to get your scores up as high as possible. Then me, someone like myself, so a real estate agent who's going to help you find the homes, be able to negotiate on your behalf, and figure out the best strategy for you. And that is pretty much it. If you want a free 15-minute buy in 12 months call, I'll map out your savings target, introduce you to Lancaster friendly agents, and we can help build your timeline together. Book here at albertinstill.com or click the link in the description below.